Hello traders, Gary Wagner with the Gold Forecast here. The very last day of October, the 31st. It is Sunday about noon in Honolulu, Hawaii, which makes it Monday morning in Australia. That means the markets have opened, and this is the daily report. Gold is currently trading higher, approximately $4 higher this morning, trading at 163.98. Call it 1364. That is due right now to both buying and a weaker U.S. dollar. About $1.55 out of the $4 is due to predominant buying, about $2.50 due to a weakening U.S. dollar. On today's report, we are going to be talking about some of the strategies that I want to impart over this next week and upcoming month, my interim as well as my longer term view of the market, all here on today's daily report. Traders, you know that we are sitting in a long position. We've got pretty good profits, about $25 profits in the marketplace. We're in at around 1337 and the market's trading at 1364. But this is a really big week coming up. I am a staunch technician, but I absolutely positively believe that it's fundamentals that rule the market, not technicals. The technicals are simply a way for someone like myself to analyze and decipher the information honestly without getting confused. When you look at fundamental data, or especially analysts out there, they are quite good at presenting compelling rational arguments for their belief system, and their belief system can be right or wrong, but they have compelling arguments. I have always believed that numbers don't lie. Math is the purest form, the purest element of communication, and that's why I am such a staunch technician. However, we do have some key fundamental activities going on in the marketplace. This week, of course, we've got the elections, we've got the open market meeting with the Federal Reserve, and those are really, in my opinion, going to be the impetus for where gold goes from here. My sentiment is purely on a technical basis. As you know, when we look at straight Elliott wave, I see right now that, of course, this is where we started down here on our bottom. This is C, the beginning of wave one. Wave one propelled us about $100. Small correction onto wave three. From wave four, we got this correction. We adequately called the top precisely where it stood. We called the bottom precisely where it stood. And now what I'm looking for is basically a move in this market, as we talked about, to about the 1420 range. This calculation, of course, is based on straight Elliott wave. However, we do want to realize that anything can happen when you have this kind of fundamental information. So my suggestion is we kind of want to hang tight with the positions that we have. There's no doubt. Let's see what this fundamental news, the elections coming up, the Federal Reserve meeting. We also have the central bank, the European Central Bank, the Bank of England, and the Bank of Japan are all going to have monetary policy meetings this week. So we've got a lot of things going on. My sentiment is, because I'm an Elliott wave trader, and that's telling me that the market is in fact going to move to this area, my sentiment is that we should look for higher prices throughout the week. However, as I said, anything can happen in this market. Traders, this is our intraday chart. This is a 30-minute candlestick chart that we typically look at for my new traders and new subscribers. What we do with these charts is really we look for areas you can see that the market will trade in a tightly defined range and then typically break out one way or the other, in this case, and lately, of course, breaking out to the upside, and then trade in what I call channels. Channels are simply tightly defined, very narrow trading ranges, and then they tend to, of course, break one way or the other, and we've had this break here. As you can see, as we opened up this morning, this is that break that we had here. The market traded just a little bit on the sideways activity as we came into the close, and then, of course, we had this straight, beautiful little gap up today. my sentiment is that this market is destined right now to move back to $1,400. What we want to see is how it does that and at what speed it does that. Because here's the thing, traders. Long term, what I am looking for is as follows. I do expect the market to trade up to, as I said, 1420. Now, let's assume that in fact it does trade to 1420. My sentiment is it's going to retrace. And if it retraces, and let me kind of draw this in for us. Now, I'm not drawing it to scale, but realize this. When you have your third, your fourth, and then your fifth wave, this fifth wave, this impulse phase ends right here. And then you typically go into what's called a corrective phase. Now, the corrective phase is simply a correction. It's healthy. It's needed. Even though fundamentally I am long-term bullish, I expect these corrections throughout. In fact, when I don't get them, I kind of get thrown off. But what you'll see is you've got 1, 2, 3, 4, 5, and then you get a series of corrective waves. There's 3 of them. Your first one is going to be your A, your B, and then finally your C wave. Once you get to that C wave, you have kind of flushed out, you have ended the corrective phase itself of the marketplace, and then you begin to go back into, of course, our favorite part of the market since we're bullish, which is our impulse phase, which will take us to a series of 5 waves. Waves 1, 2, 3, 4, and then 5. So that right now, this will, in fact, if it follows Elliott wave strategy, and it has, for the most part, been extremely correct in terms of the delineation that I have made, the calls that I have made, and these have been based upon Elliott waves. Elliott waves have been very good to us. I see no reason right now to look for it to move farther away. Rather, I think that it will continue to follow closely. So, long-term view, I'm looking at this as our final hurrah, let's call it. And once we get this final hurrah and we hit whatever numbers we're going to around this 1400, whether it goes 1400, 1420, 1405, 1390, we will simply look for candlestick patterns, and it's those candlestick patterns that will help us determine when we've actually hit a top, along with we'll use Andrew's pitchfork again, and of course trend analysis. We will then look for that correction and we will plot strategies accordingly. Right now, short-term strategy is once some of this news is filtered into the market and we have a good sense where we're not going to see a huge kickback, a kick against us. My sentiment is we want to extract a little bit more out of this market. We have a good position. My aggressive traders now have 2 positions in this market. So we will look to scale and add a 3rd position for my aggressive traders, a 2nd position for my conservative traders, and see if we can't extract more profits out of this market. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily report. Bye-bye.